Rick, it is an absolute honor to speak to you. You're a living legend, and you are the most quoted person, I think, after Warren Buffett. So it's a big honor to speak to you.
Well, I talk a lot, so it's no wonder I'm quoted so often, but thank you for having me on.
Absolutely. And just to go through some of those quotes, one of them is, for uranium, it's not a if, it's a when. Did you say that? Okay.
Correct.
You also say something about moose pasture isn't worth that much.
I don't remember that one specifically, but I know it to be true.
Okay. And then the other one is, the cure for low prices is low prices.
I believe I am the author of that, and it is frequently quoted. I may have, however, have stolen it inadvertently in my youth.
Okay, cool. Yeah, no, it's just really funny because a lot of the guests come on and say, as Rick Rule says, X, Y, Z. So anyway, so we're looking for undervalued assets currently, and you're very well known to be a big investor in the resource space. So just, can you let us know what you think is the most undervalued sector currently?
I think that really depends on your time frame. As an example, I would say that the most certain is probably uranium. But ironically, the stocks have melted up before the uranium prices run. So I wouldn't describe the junior uranium sector as undervalued relative to $30 yellow cake. I'm sort of between a rock and a hard space, or jello and a soft space, in the sense that I believe, for reasons that we can discuss later, that uranium will likely to go to $50 or $60 a pound. But it's not there yet. And the uranium juniors, at least the reasonably high quality uranium juniors, have uniformly tripled. So I'm in the interesting place of seeing the commodity underpriced at the same time that I see the stocks on a net present value basis being overvalued. It's an interesting place to be.
Yeah, no, it really is. And that's kind of why I'd love to pick your brain about that, because, right, the spot price is still at 30, but a lot of these juniors have like 5X'd, 3 to 5X. Correct. And I saw actually on Reddit, I think like DNN Mines was like one of the top trending stocks among all retail investors. And I was thinking, okay, is it frothy? But I mean, the spot price hasn't even moved. So what should we do?
I think it depends on your time frame. If you are willing to take a longer time frame, sidebar, as I get older and I have less time on Earth, ironically, I'm more patient. When I was a young man, I was in a big hurry, which caused me not to make as much money as I do now. It seems that although I have less time on Earth, I tend to think in 5 or 6 year time frames, whereas I used to think in 5 or 6 month time frames. But I digress. If you are willing to take a longer term time frame, then uranium is an interesting space to be. Right now, in terms of relative valuations, I would think that the investors would want to be more involved in things like CGN Mining and Kazatomprom, which is to say the larger companies that enjoy substantial free cash flow at current uranium prices. And by the way, are polite enough to pay dividends to their owners. There's nothing that overcomes the time value of money objection like a nice quarterly dividend to shield you from the discount. To get back to Denison, I would say that it, in terms of narrative, is one of the class acts of the juniors. I note that this week, Ron Hochstein, one of the founders, rejoined the company, which is a very bullish sign. I've known Ron for 30 years. And know him to be a highly, highly, highly competent uranium executive. It's backed, of course, by the Lundin family, which are 3 generations of serially successful natural resource financiers and entrepreneurs. They have a permitted mill in the Athabasca Basin, which is, if you will, the Persian Gulf of uranium. Permitting another mill in the People's Republic of Canada will be a real challenge. And the fact that they have one already permitted is a nice thing. And they have 2 indicated discoveries in the Athabasca Basin. That's all great. The problem is that Denison's no longer cheap at $30 yellow cake. So when you look at comparative valuations relative to other juniors, it's still attractive on a comparative basis. It is not attractive on an absolute basis at $30 yellow cake. Sorry for that long-winded answer. I know that your listeners want one-size-fits-all, simple declarative sound bites. I'm just out of them.
No, that's no problem. I really appreciate that analysis on Denison. I agree. So a lot of the juniors are expensive. Are you still seeing any value in the space?
I think Kazatomprom is
Yeah.
very attractive. A lot of people are, for good reason, hesitant to invest in Kazakhstan. They are hesitant to invest in a company where at least the notes of the financial statements are opaque, at least by Western standards. But if you value the company based on assets and the quality in particular of the middle and younger managers, it's a superb company. I've had the opportunity to interview probably 20 Kazatomprom executives, and I'm hugely impressed by this crop of young Kazakhs. So in addition to the fact that they have the best rocks in the world, arguably they have some of the best people.
Yeah, no, that's absolutely true. And but they also they have the lowest cost, don't they?
Correct. Correct. By far. By a country mile. They will be the quickest and the least capital intensive to return redundant capacity to operations. They have the best development pipeline. They have the best exploration upside. They have the best opportunity to do joint ventures. They have the least political constraints on operations. Simply put, if one was going to construct a one-size-fits-all uranium portfolio, one might merely buy Kazatomprom, sit back and enjoy the dividend.
Yeah, no, I hear you. And so, I mean, that's really interesting. So yeah, we've been focusing more on the juniors, but it makes a lot of sense because no matter what the spot price does, they're going to be pumping out. They're going to be cash flowing unless it goes below like 20 or something. But
some deposits like Inkai can produce positive cash flow at 15.
Wow.
The younger managers at Kazatomprom have taken the point of view that given their assumption that uranium prices have ultimately to return to the total cost of production, including cost of capital, that it's not in their interest to produce those reserves and sell them at today's prices, that it's in their interest to service their contracts with pounds that they buy out of the spot market and keep their uranium in the ground, given their belief, which is the same as mine, that higher prices are inevitable. And I think that's a very good decision. The idea that they could produce uranium now at a cash cost of $12 and sell it for $30, meaning they would enjoy an $18 margin, doesn't detract from the fact that they're able to sell pounds on contract in the high 30s, low 40s, which they buy out of the spot market at 30, enjoying a lower current market, but preserving margin on their equity pounds for a period in time when the global uranium price is more attractive from their point of view. I think it's a wonderful, albeit nuanced decision.
Absolutely. And for investors that might hear that and say, oh, no, why would the spot price go up if Kazatomprom can just pump it out at this low cost? Do you still see, like in the future, just a serious demand that massive companies like Kazatomprom cannot meet? So that will leave room for other juniors.
But not in the future. Right now, we're consuming substantially more uranium than we're producing. We have uranium stockpiles left over from 50 years of Cold War idiocy, where the United States and the Soviet Union didn't feel secure unless they had enough uranium stockpiled to kill the world's population 10,000 times over. So blending that down and also working off the stockpiles that were occasioned by the shutdown of the Japanese nuclear fleet post-Fukushima and the stockpiles that were built up with the buildup of Kazakh production in the last bull market means that we had a fairly substantial uranium stockpile to work off. So for a while, the world can continue to consume uranium, which it's able to buy for less than the cost of production. But when that party's over, unfortunately, I can't tell you when that is. When that party's over, the price of uranium changes very, very, very quickly. Your listeners who are interested in the uranium market need to consider a few relevant. The first is that the International Energy Agency suggests that the global cost to produce a pound of uranium total cost, not just mining cost, but total cost, which includes the cost of capital and also adds back prior year write-downs, money that went to money heaven, but certainly contributed to today's excesses, is between $50 and $60 US a pound. So the industry is making the stuff for 50 and selling it for 30, losing $20 a pound, and of course, trying to make it up on volume. That lasts until it doesn't. And if you don't eventually pay the industry its cost of capital, the industry ceases to exist and uranium ceases to exist. Is that possible? Well, in the United States, as an example, uranium, although it's unpopular, generates 15% of total electricity consumption and 20% of baseload consumption. There is no way in the 5 to 6 year time frame that we can replace uranium with any fuel: wind, solar, hydro, coal. Doesn't matter. Either the price goes up or the lights go out. I'll leave it to your viewers to determine which, from their point of view, is more likely. Finally, in addition to the fact that the price has to go up, the price can go up because the cost of uranium is almost irrelevant to a reactor in terms of turning out power. The capital cost associated with building the plant, the regulatory and compliance costs, all of those things are much larger factors in the cost to produce a kilowatt hour of electricity. If the uranium price doubles, it has almost no impact on the cost structure of a nuclear power plant. So the price has to go up and the price can go up. When something has to happen and can happen, my suspicion is that it will happen.
Makes a lot of sense. So just going back, because I haven't heard that before. So you're saying there was stockpiled uranium from the Cold War, and we're still eating into that?
Mercifully, a lot of U.S. consumption in the last 20 years has had to do with blending down weapons-grade uranium that was stockpiled both in the U.S. and the former Soviet Union. I happen to believe this is a wonderful thing. It seems in the Cold War that the big thinkers of the world believed that we didn't have military security unless, respectively, we had what was called overkill. Overkill is enough weapons-grade material to kill everybody on Earth once. Apparently, the United States felt secure, although we had a lot of finished bombs. We felt secure with only about 1,000 overkill. The Russians, by all indications, didn't feel secure until they had 10,000 overkill, which is to say, between us, we had enough bomb material to kill everybody on Earth 12,000 times. Oh, mercifully, beginning in the late 1980s, a decision was made on everyone's part that it would be much more intelligent to maintain reserves that were like 4 or 5 overkill, killing everybody on Earth 5 times each individually, seemed secure enough so that we could take that extra weapons grade fuel and blend it down to utility grade fuel. And we've done a wonderful job as a species in the last 20 years doing just that.
Okay. And I guess there's still some gray area about how much is left to eat into. And, right.
I've spent 20 years trying to understand inventories in the uranium business, and I am right where I started. That is to say, I've made no progress in 20 years.
Okay, I hear you. So I have to ask this. I've asked some guests this, but just want to get your perspective. Are you bullish American uranium? Because
No. I mean, the uranium doesn't care where it comes from. I guess in the highly politicized nature of the United States, if you follow the old Mencken dictum that elections are advanced auctions of stolen property, that some people in the U.S. political system would benefit by paying too much for uranium, which is to say U.S. uranium producers. My suspicion is that that benefit will be contested by the utilities, who would prefer not to pay too much, and happen to believe that the Canadians would probably continue to be willing to sell us theirs. And if not, ironically, that big supplier of U.S. nuclear fuels, which is to say the Russians, might step into the gap for old-fashioned reasons like they need the money. I think that the narrative is important in the stock market, though. I think that Americans, like everybody else in the world, are ethnocentric, and some Americans believe that American cars are better, or American bread is better, or American uranium is better. and other people who are merely shareholders of US-based companies and would like to see the shares of those companies go up, believe that they individually would be better off if all of American consumers were a little poorer, which is to say, if we subsidized US uranium at the expense of free markets.
Okay, so that makes sense. We can get it a lot cheaper from Canada and even the Russians.
Right.
Okay, so I've heard, and this may be way outdated, but I've heard that Paladin is your favorite stock. Is that
that was outdated? Paladin was the single most extraordinary financial event of my lifetime. I discovered Paladin well before the last uranium bull market started and refinanced the company. It was really, truly running on fumes. We did a 10-cent private placement, if my memory serves me well, with a 15-cent warrant. And I was rewarded for my genius by seeing the stock go from 10 cents to 9 cents to 8 cents to 7 cents to 6 cents, all the way down to a penny.
Oh.
If you own something at a dime and it's selling for a penny, you need to revisit your premise. Either you are wrong or the market is wrong. Mercifully, when I revisited my premise, I decided the market was wrong and kept buying. In 6.5 years from it touching a penny, it went to $10. So my round trip was more 10 cents to $10. And I don't want your readers to be naive enough to believe that I kept all my 10-cent stock to $10. That didn't and would never happen. Okay. That notwithstanding, a 6.5 year trip from 10 cents to $10 is a memorable financial event. The Paladin people, I think, began, including my good friend John Borshoff, who remains a good friend of mine until today, came to believe the uranium narrative, even though the uranium narrative was no longer valid. Which is to say, at $8, which was the price of uranium when I bought the stock, I felt that the uranium price had to go to 40. But it didn't go to 40. It went to 150. At 150, it didn't have to go up. It had to go down, which is precisely what happened. And Paladin came to regard debt as a cheaper form of capital than equity, which is to say that with regards to their production finance, both in Malawi and in Botswana, they relied too heavily on debt, and they didn't hedge enough uranium. They continued to be uranium bulls with regards to the price when the price didn't have to go up anymore. That balance sheet and my general disinclination to uranium in 2006, when I saw it to be overpriced, caused me to have the very good fortune to be a seller. And I remained a seller really until 6 months ago, when they restructured their debt and raised sufficient equity to refurbish their balance sheet. They, for 2.5 years, didn't have very much debt on the corporate balance sheet, but their primary asset was encumbered at the asset level. And until they fixed that, I didn't see any value for shareholders. I do see value for shareholders now.
Gotcha. Okay. And so do you diversify globally? Are you invested in like the Australia producers?
I absolutely am. I'm much less how would you say? I'm more tolerant of perceived political risk than most of my competitors, not because I don't believe that places like Russia or Congo don't have risks, but because I believe that every place has risk. Many people who look like you and I believe that money stolen from them by white males in a legislature in English, according to the rule of law, is somehow less gone than when it's stolen from us in China or Russia or Congo. The worst personal experience I've ever had with political risk was in the People's Republic of California, where the legislature stole something like $600 million in net present value from shareholders of Viceroy Resources. So I've become sort of a connoisseur of political risk. The consequence of that is that I am much more likely than my peers not to invest because of pricing in places that are believed to be secure political jurisdictions. British Columbia and California would be primary examples, and much more inclined to invest in places that other people consider to be uninvestable. China, Russia, Congo, Malawi. I have a different take on political risk. I believe that all jurisdictions are bad. I also believe that very often when a situation couldn't possibly get worse, like in the 1996 civil war in Congo, it doesn't get worse, it gets better. albeit from a very low bottom. Similarly, I believe that when people believe that they have the ability to be stupid, that they become stupid. And when a place can't possibly get any better, it doesn't. It gets worse. So I have an odd approach to political risk.
Okay, so you don't seem to have a problem investing in like some of the West African countries. But you would diversify that risk a little bit by going elsewhere in addition?
I'm an asset investor and a people investor first. So, I mean, Warren Buffett famously said, put all your eggs in one basket and watch that basket very closely. He also said that the ideal holding period for a stock is forever. I haven't yet found a stock that was good enough to have all my net worth in it. And I haven't found a stock that was good enough for me to hold forever. I'm a believer in concentrated investments where I think that the risk to reward parameter is in my favor. We're in a situation now with negative real interest rates where damn near everything from my point of view is expensive. It's very difficult for me to find an absolutely undervalued asset class. I can find lots of relatively undervalued asset classes, but it's very difficult for me to find something that really, really, really stokes my greed.
Yeah, no, I think a lot of people are dealing with that. I think the last time things were affordable or were undervalued was March of 2020 at the bottom of the COVID crisis, right?
Yeah. Yep. And I wasn't as aggressive then as I should have been. I believed that the hit from COVID would be stronger, not because the disease would be stronger, but rather I felt that we had to work off the excesses of a 10-year bull market that went back to the stimulus from 2009 and 2010. Very often, I have bet against the Fed and bet against the tape. And in the near term, that's usually a bad bet. In the long term, it's often a good bet, but in the near term, it's often a bad bet.
Yeah, absolutely. So that is kind of the question, right? So the Fed is devaluing the currency, they're increasing their balance sheet. Is everything just going to go up with that? I mean,
I don't know the answer to that. I should caution your listeners that because of my nervousness of liquidity-induced rallies, I've correctly called 17 of the last 3 declines. Right. And so people need to take note of the philosophy behind my caution and take note of the fact that as a lender, I'm very good. As an investor, I'm pretty good. And as an economist, I'm horrific. I would say that you look at the actions of the Fed, and I think that what you have to do is look at the asset classes that are most likely to benefit and look at those valuations for relative or absolute valuation or undervaluation. As a consequence of that, as an example, I'm attracted to the mid-tier gold producers. The very big gold producers are fairly priced at today's gold prices, and that's a good buy too, because buying the best of the best, you seldom go wrong over time. The bottom of the precious metals market, which is to say the juniors, are uniformly overpriced. Uniformly overpriced.
Wow.
Companies that have assets that could be liquidated to other mining companies on the street for $5 million, but frequently have $200 million market caps. Companies whose financial public relations budgets exceed their drilling budgets are the ones that are performing the best in the market, which is to say that narrative is outperforming assets right now. I've seen this before. It doesn't end well. But the mid-cap producers, particularly the single asset producers, which are rightly believed to be riskier than the multi-asset producers, are trading at the lowest net asset value to enterprise value multiples using the forward strip as a pricing guideline that I've seen in my career. So that asset class, I think, isn't merely relatively attractive. I think it's absolutely attractive, and absolutely attractive asset classes are very rare. This assumes, of course, that the consequence of quantitative easing and negative real interest rates in the future will be the same as it's been in the past, which is to say depreciating currency and appreciating precious metals prices.
I think what you just said is extremely valuable to investors, because most people probably don't know that a lot of the juniors in the precious metals are overvalued. I mean, you just don't hear that, right? You see a small market cap, maybe 100 million, and you think, oh, it could go to a billion, but
well, we're in a circumstance where the market has been extremely generous for 40 years. The consequence of that generous market, declining interest rates, has given rise to this idiotic phenomenon called fear of missing out. I used to give a speech on the difference between errors of omission and errors of commission. An error of omission is something that you miss and you don't make money on it where you might have. An error of commission is where you lose money. Errors of commission are much worse sins than errors of omission. Fear of missing out is the thing that generates errors of commission. The Bitcoin price goes from $5,000 to $50,000 with very little increase in the network around Bitcoin. The fact that Bitcoin has gone from $5,000 to $50,000 in terms of price to utility suggests that Bitcoin is 90% less attractive arithmetically than it was at $5,000. But the fact that it's gone from $5,000 to $50,000 means that the price action has justified the narrative.
Right.
If your investing style goes to arithmetic rather than narrative, you miss out on a lot, but you don't miss out very often on opportunities to lose vast quantities of money by being stupid.
No, absolutely. That's why it's very helpful to have an expert like you on to look through the narrative, look at the fundamental value of a lot of these stocks, especially like silver and gold. So before we wrap up, could you just comment on copper and its insane rise and where do you think that's going to go?
Well, there's one I got really wrong. I continued to believe that we were in an economic warm spot that had more to do with artificial liquidity and artificially low interest rates than it did increases in utility, increases in technology, increases in world trade. And the consequence of that is that I had a $5 price target on copper in 2025. I had anticipated that copper would be sub $3 today. Mercifully for me, I was wrong. If you are one who believes that our current benign economic climate continues, then you can be a copper bull, because almost no matter what we do, we're going to have supply shortages in copper. We have not, as a society, invested enough in copper exploration and copper development for the last 25 years. And building a new copper mine, that is alleviating the shortages that will certainly come about as a consequence of the decline of existing mines, is unavoidable. The question is, will the copper price go down before it goes back up? And I don't know the answer to that. I can tell you that if you have a 5-year time frame, you're fine to be in copper, as long as you have the intestinal fortitude to suffer what could potentially be a 30 or 40% decline between now and then.
Absolutely, and if there's a dip, then that's an opportunity potentially. So, but I have to ask, because commodities are very, very tricky. Because, like you say, the cure for low prices is low prices. Well, the cure for high prices is high prices too, right?
That's right.
Because people immediately start to think of ways of saving money by getting around it. So, like copper, for instance, I Googled it, and you instantly see people starting to like, oh, well, you can transmit electricity with aluminum. You can try to do different things. Technologies help. Even carbon nanotubes. Have you heard? I don't know if you've heard of that, but there's ways that you can get around.
Yeah, and most of what will happen won't be profound substitution. Most of it will be incremental improvements in fabrication technology. That is, we'll learn to do more with less. When copper was selling at $2.20 a pound, you didn't have to be too efficient using it. With copper selling at $5 a pound, you have to be much more efficient using it, particularly in applications like the transmission of large quantities of electricity. The copper case, the copper case in North America, the copper narrative has really devolved into, I would call it ethnocentricity. We believe, because we're rich, that the future of copper is electric vehicles. That's not, it's part of the future of copper, but the future of copper is 1.2 billion people around the world that don't have access to primary electricity. They will, and they'll have it soon. And it isn't just the copper wire that gets copper to them. It's the fact that they electrify their homes. It's the fact that they trade shoes for a bicycle and a bicycle for a 50cc motorcycle, and a 50cc motorcycle not for a Tesla, but rather for a Toyota Hilux. The urbanization, the ascent of humankind, and electrification are the future for the copper business. That isn't to say that electric vehicles and distributed power, which is a fancy way of saying batteries, aren't important. It's just that the reliance on that narrative is a North American and a European phenomenon. It ignores the lesson of the last bull market in commodities, which was the ascent of China, which is a different way of saying the ascent of humankind.
Gotcha. And that makes sense, right? Yeah. So there's a lot more than just like the developed green narrative.
Correct.
Correct. So then my last question. So you are bullish the ascent of humankind. You don't see kind of a hyperinflationary, stagflationary mess that we're not going to get out of for years. You think emerging markets and around the world will still grow? And
those two statements aren't exclusive. The idea that we could revisit the decade of the 70s, which was my formative years, horrible time, social chaos, starvation, stagflation. The idea that there won't be a reckoning for the idiocy of the last 40 years, I don't know. I'd like to see us get around it. It seems to me that the increasing reliance of humankind on collective solutions, on government, on coercion, on extortion, is extremely bearish. Thus far, particularly in the United States, our individual initiative, individual creativity, the fact that 6 pimply-faced kids can commandeer a garage in Sunnyvale and out pops Google, has meant that our individual efforts have financed our collective stupidity. Whether we have the ability to be this innovative, whether we have the freedom to be innovative in the past, innovative enough to overcome debt and deficits and our collective stupidity is a different question. But the ascent of man, humankind is what I should say now, not just for politically correct purposes, but for real purposes. The ascent of humankind is something that I believe in. I believe in technology. I believe in the efforts of voluntary free people. And my suspicion is that as the penalties associated with the stupidity of collectiveness become apparent to more, that the reaction to it will be the same as the reaction was in Russia, in China, in Estonia, Latvia, Lithuania, Rwanda. Maybe sanity comes to a city near you.
Excellent. Well, gosh, I think your comments are going to help a lot of people. Really valuable. Thank you for sharing your time. Where can people go to learn more from you?
As you know, I give people an incentive to learn more about me. Any of your listeners or readers who care about what I think about their natural resource portfolios are advised to find out for free. Go to a website, sprotusa.com/rankings. Enter your natural resource stocks. Please no technology stocks. Please no cannabis stocks. I'll rank them 1 to 10, 1 being best, 10 being worst, and I'll comment on individual issues where I think my comments might have value. In addition, if you mention the word chart, either in the heading or in the comments section, I'll send you a copy of the Barron's Gold Mining Index chart, not because I'm a technical analyst, but because it's the best visual aid that I know of to understand the valuations of gold equities going back over time and understand, too, the anatomy of a precious metals bull market. And finally, I'll send you a 100-year commodity chart that talks about how relatively cheap industrial materials are relative to other asset classes going back 100 years. That's sprotusa.com/rankings.
Extremely valuable. Great thing to take advantage of. That's very generous of you. Thanks so much.
A pleasure. Thank you.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.